Well, hello, everyone, and welcome to the Hawaii International Real Estate Council's presentation of tax tips for your global clients. I'm Patrick O'Neill. I'm principal broker at Luxury Homes International and serving this year as the president of the Hawaii International Real Estate Council. And we're so happy that you could join us. Before we get started, just a quick disclaimer. The information presented by our speakers is general in nature and is not to be considered advice regarding legal, taxation, real estate, estate planning, or immigration matters, etc., etc. And a very special thank you to Crystal Bisay and Wendy Brown of the Hawaii Association of Realtors for coordinating our event today and for all that you do throughout the year. Ladies, we truly do appreciate it. And also a very special thank you to our sponsor today, Guaranteed Rate. And Guaranteed Rate is not just our sponsor today, but they sponsor every single one of our events that we do. And we simply couldn't do it without them. And let me introduce to you Senior Vice President of Mortgage Lending, a face familiar to many, Mr. Leonard Leventhal. And Leonard, what's happening out there in the interest rate world?
Thank you, Patrick. It's nice to see everybody and get a chance to update you. It's interesting you would say interest rate because for many years interest rates were never a concern. As most of you know, we just went on cruise control from maybe 2010, 11, all the way through 2021 through COVID. And then this year we struck a whole different chord and rates had unexpectedly and unprecedentedly jumped, and that caused an immediate effect on the market, on clients' ability to borrow, ability to get a basically a 30-year fixed loan. So now I think everybody has sort of come to the conclusion that we are in the 5% range and we're here to stay for a while. The shock has sort of worn off, so I can see myself and my fellow officers sort of getting more calls now. People have overcome that sudden surge in rates to say, you know what, buying real estate is still what I want to do. It's still an excellent investment. The market has been braked a little bit by the rate hike, so that gives buyers a little bit more of a chance. So that's kind of what we're seeing now. The rates have come down a little bit the last week or so, and as I've been telling most of the realtors that I talk to, it's so crazy right now that we got to check every day or every other day just to see where the rates are with ARMs, with investment loans, with primary residence. So we check all the time. Even if we did a quote 2 days ago, we check again just to see if the market has moved, and it can. So with that, we're always pleased to be here in front of you. We're at your service. Guaranteed Rate, as most of you know, is 100% digital. We take everything in through secure digital portals. We also maintain and retain the ability to meet in person, basically old school. When Guaranteed Rate bought our company back in 2018, they made sure we had the tools and the methodology to help the local buyers, which some of them definitely like hands-on, face-to-face, which we can do. We also have ability to bring loans to our local lenders who can do lending on properties that are not conforming or not up to national standards. So we have that ability as well. So basically, we're a one-stop shop. We're stronger than we were when we were Honolulu Home Loans, and we also continue to work as a team. So from my boss, Anders, and a lot of the familiar faces that I'll share with you maybe after the seminar, we all work together. We make sure the client has the best possible experience with the person that best fits their needs and their personality. So we've got a statewide group, very strong, very keyed on the purchase market. So with all of that, we hope that we can be of help to you. I'll put my contact information in the chat, and have a great seminar. We've had Jessica here before. She's excellent. So enjoy your webinar. Thank you, Patrick.
Oh, Leonard, before you go,
Yes.
quick question.
Mhm.
Right now, a standard vanilla loan, if there is such a thing, residential, where approximately are 30-year rates fixed with a point? Just approximately.
With a point, I'm saying at least 5%. It's come down a bit. So with a point, I'd say 5% without looking at credit scores, assuming that it's vanilla. I'd say you're in the 5. You could be 5%, maybe 4.99.
And how high did that get over the past 30 days?
On a vanilla loan, I would say in the last 30 to 45 days, I say we were in the 5.5.
Oh, I see. Okay. but right now, maybe sort of right around 5. So that's encouraging. That's very encouraging.
I'm gonna look it up after I'm done, and I'm gonna put it in the chat. If
Thanks, Leonard. And thank you so much for sponsoring all these events. We
welcome.
really couldn't do it without you guys.
Class.
All right. Good to see you, Leonard. Take care.
Here, Patrick.
Okay. All righty. And a big shout out to all the members of the Hawaii International Real Estate Council. The council coordinates educational events throughout the year, which are really focused on the issues surrounding international clientele and real estate in Hawaii and throughout the US. If you missed our event last month, it was a really good one. We had a panel talk. We had people on the Zoom from Seoul, Hawaii, California, New York, discussing Japan, Korea, China markets, how real estate is conducted in those countries, and how that relates to when the clients come and transact in Hawaii in the US. There is a replay available, and perhaps, Krista, we could throw that into the chat. It's fascinating. If you're interested in these international markets, I highly recommend you check it out. Next month, we have David Garfield. He is an immigration attorney in Washington, D.C. He also has a local office in Hawaii. Always a great guy to hear and hear the latest. I think there's been some changes with the new administration in place. And then in November, Ralph Cosa. Ralph has been associated with some of the top think tanks in the United States. He's a fascinating individual. If you've not heard him before, I highly recommend it. This one generally sells out, if you can believe it, even on Zoom. And by the way, both of these are going to be complimentary events, again, thanks to guaranteed rate. So Krista will put some information in the chat if you're interested in those, or if you're interested in membership in the Hawaii International Real Estate Council. And here's the website if you want to check that out as well, highrick.org. And I should say, as we go through the presentation today, if you have questions, please drop those in the Q&A. We're gonna save a lot of time with Jessica for the Q&A portion. So please put those in as you're going through there, whatever might pop into your mind. Okay, on to Jessica Sue. Jessica is a CPA. She is a tax director at Trusta and international liaison partner for Crow Global. She is fluent in Mandarin and Taiwanese and manages her firm's international tax practice with over 18 years of experience in Hawaii and Taiwan. Jessica has co-authored several tax publications and is on the board of directors and previously chaired the tax committee of the Hawaii Society of Public Accountants. And on a personal note, we've referred several clients to Jessica, and she's done an absolutely outstanding job. Jessica, it's so great to have you back. Please welcome Jessica Sue. Jessica, take it away.
Hi, Patrick. Can you see me now?
We can see you, yes.
Hi, everybody. Thank you for having me back. I'm really, really happy to come to talk to everyone today. And even though I cannot see you in person, I feel that since I see all of you guys kind of at different time of year, so I feel that we have been seeing each other quite regularly. So when Krista initially come back to me and talking about to make a presentation for HIRAC, I actually told her that I need help, and I need help from all of you because talking about the FIRPTA and HARPTA refund claim. Do I share my screen yet?
We don't see it yet.
You don't see it yet. Let me get it. Share screen. Where's the? How do I get to that one?
The green button, if you see it on your either down below or up above.
I see a share, and then I will move it up. Can you already see it now?
Not yet. So share your screen and then click on the presentation.
Okay, hold on. Try it again. Share my screen. Share. And
we see your email.
Oh no.
It's okay.
Okay, hold on. I have to new share. See it?
We're still see your email, but you just go to select your PowerPoint now. There you go. And then let's hit that button again to start it. Perfect. You got it.
Okay. So sorry. So we're going to start it with this as actually I say I need help because I think many of you actually helped like last year, I think for the past couple of years due to pandemic, there are lots of foreign investors actually because they cannot come to Hawaii. And then so many of them actually decide to sell the properties. And then when you sell the property, the first thing hasn't happened is the FIRPTA and HARPTA withholdings. And then many people, I think many foreigners, they think once the tax get withheld, they know they did not owe them much tax. They expect the refund. But when they think about refund, they did not think it's actually requires certain kind of procedures to get a refund. Or so a lot of time when we get a referral from the realtors, it's their client already sell the property, did the FIRPTA and HARPTA, and have a form ready. Say they pay the tax, and they say, please help us to file the refund claim. And I don't know if you realize that actually if in the past few years, the FIRPTA refund especially, it's very, very difficult. And believe it or not, currently I'm still dealing with a couple of the FIRPTA refunds since 2017. The sale was incurred in 2017, but then the seller still cannot get their money back. And they actually don't owe a penny, but they cannot get their money back. And the whole process is very, very complicated. But that's why I want to talk to you. Oh, it's because I believe that as a realtor, you actually has the best chance to help your client to get their refund fast if you make your client aware of certain things. And so that's why I want to go through this presentation, kind of talk to you about this FIRPTA and HARPTA refund claim process and what to expect during this whole process. So as many of you already know, so FIRPTA is for Foreign Investment in Real Property Tax Act. Is withholding on 50% on your gross sale price of U.S. real properties. And so many U.S. real properties, including like the buildings, real properties, and also including interest in U.S. company that holds U.S. real properties. So definition of transfer is for sale, exchange, gift, or any other transfers. So in many cases, there are many people actually, they use the LLC, single member LLC, which is called disregarded entities, to make the purchase of real properties. I think many people wrongfully believe that if they use a single member LLC to hold the properties, they will be treated as the U.S. entities because it's Hawaii LLC, for example, and then they will not be subject to FIRPTA and HARPTA. That is incorrect because for a single member LLC, it is treated disregarded. So it means it does not exist for income tax purposes. It exists only for legal purposes. So when you file tax returns, it's the individual be filing the tax returns. So if the individual owner is a foreign person, they will be subject to the FIRPTA and HARPTA. I think it happened earlier. I got an inquiry from another seller. It's when they were going through the escrow, and then because they were Canadian citizens, and then they held the property through a Hawaii LLC, and they were told that they do not need to do a HARPTA, but that's not correct. If the LLC elected to be treated as a corporation, to be taxed as a corporation, means that they actually file tax return using corporate tax returns, then they can be exempt from the FIRPTA and HARPTA. But just as a disregarded entity, it doesn't work. Next slide. So for withholding certificates, I think now it's less popular now if we actually want to do the FIRPTA exemption certificates. The reason it's not popular is because it takes a long time for IRS to process the certificate. And when you want to do this one, you actually have to claim this, you have to file this application before the sale is before the sale. So you do it in advance. And it's or they can say their transactions, it's exempt. It's not taxable. For example, they are doing 1031s, they are doing the reorganizations. That's so then they can apply for that. And the application is solely based on the calculation of their maximum tax liabilities. So which means it's not taking any additional deductions. It's basically what's your sale price is minus your cost. That's what they are looking at maximum. You don't take any deductions on those. Okay. So now I want to come down here is I think in many of my presentations, I stress about the importance of having the individual taxpayer identification number. So this I-10 is effective from November 4, 2003. IRS actually requires all foreign buyers and sellers of the U.S. real property interests to provide their I-10s, their names and address on the withholding tax return, which is Form 8288, and application for withholding certificates. So when you have a client who actually come in to buy a property or sell a property, your first question would be actually, do you have an I-10? And if they don't have an I-10, you need to start working on that because it takes 11 weeks to get an I-10. So a transfer that actually wanted to reduce to eliminate their FIRPTA withholding amount, they have to file a Form 8288B. Later on, I'm going to show you the form so you can see what am I talking about. So you can file the form and then you have to attach. If they don't have a social security numbers, you have to attach I-10, your W-7, which is I-10 applications with your exemption certification applications. Okay. So if the transferee does not have I-10, and the amount was withheld under Section 1445, then you have to, the escrow company will complete a Form 8288 and 8288A, and then they will mail the form with the payment to the IRS, right? But in a separate package, the person who does not have the I-10, they actually need to file another Form W-7, which is signed, and with a photocopy of Form 8288 and 8288A to Internal Revenue Services. The reason is that I think I have seen the reason that the FIRPTA refund is so difficult is a lot of time the sellers do not have an I-10. And when they don't have an I-10, the box, actually I'm going to go, since I'm going to move it to the Form 8288 show you. This is the Form 8288 forms. You guys must have been seeing this before. This is part of sales documents. I know it's always handled by the escrow, but the things about the escrow focus is try to get the money. They get the money, their main focus is get the money out. However, what they put on the form, actually, it's really, really important. And the most important part is this part. Can you see my mouse here? So on the Form 8288A, this withholding agents, which usually is the buyer, right? You need to put on the buyer's I-10 number or their social security numbers or the EIN numbers. This one, they need to be provided. That's why in the earlier presentation, I said the buyer and seller need to have an I-10. So here you need to put the buyer's I-10. Here you need to put down the seller's I-10s. This part of seller's I-10, it's social security numbers or I-10. I have seen people leave it blank, or they actually, some people even put in their passport number on this form on here. Whenever you leave it blank, or you actually have your passport number or any other random number, or it's any other people's number other than the seller's numbers, you're not going to see your refund for a long, long time. Imagine when you actually get your paycheck, if you are W-2 earners, if you get your paycheck, the tax has been withheld from your payroll, but they did not provide your social security number on that form, on your W-2. How are you going to get the credits? you can try to get a credit without this one, you can try to get credits, but you actually have to do a lot of work now to prove to IRS you make the payments, you are entitled to the credits. So it would take a lot of time. So to make sure that you get your FIRPTA refund fast, actually all the things is on this form 8288A. It's really, really important. And if the escrow did not have the right information, then you need to make sure your client has it. Another thing is this name of person subject to withholding, it's your client's name. This is usually it's easy. The date of transfer is easy. The federal income tax return is easy. Amount realized is easy. These are all okay. The foreign address, you can put down your client's foreign address. That's fine because they are from foreign countries. The problem is here on this bottom here is the mailing address of person subject to withholding if different. So in many cases, because what happened is the IRS actually, once they get the money, you get everything in, they get all the money, they're going to stamp the copy. Everything here is correct. They will stamp this copy and then will mail to this address, foreign address. If there's nothing here, nothing in the mailing address, this one, they'll mail to this address. And there are so many times, I don't know what, but there are so many times the address is incorrect. Or because of COVID, I think the mailing is an issue. So many people do not receive anything. So my recommendations is if you actually insist to have the certificate to be mailed to your foreign address, you have to make sure that the address on this foreign address is correct and you will be able to receive the mail. If you are not so certain that you will be receiving the mail, you can still list your foreign address. However, I recommend you to actually put a local Hawaii address for your friends, whoever, or your realtors who can receive the certificate for you. So you have a US mailing address. So then the certificate will be mailed to a US address and you will receive the certificates. Okay. So I think if this form is done correctly, you will get your refund much faster. So now I'm going to go back to my presentation about these I-10 issues. So for the I-10s, if they do not have, as I said, you have to do a separate process. You have the escrow to send the money and you have to send a different separate packet to get your W-7 with a copy of the FIRPTA withholdings with to send you to I-10 units. And then for I just want to let you know, earlier I showed you the form, right? If you do not have I-10 show on your form 8288A, the IRS would not date that the form 8288A. And then instead, they will send a letter called 3794 letter to the transferor, which is still going to be the address on the form 8288 I just show you. So if you don't get it, you're going to miss that. They're going to send that to you. And once you receive that, you have to write it on the letter and you mail back to the IRS. And then the IRS will document the I-10 number on the form 8288, and then they will send the stamp copy to you. So the stamp copy, it's important, is you treat it as it's a receipt. It's IRS confirmed they've got the money. They have the money there for you. But if you don't receive it, then you know that's a problem. And that's going to take a long time for you to fix it. But all this actually is starting from the client knowing that they need to have an I-10. So it's about how the I-10 works. I-10 usually take about, I say, about 7 weeks to 11 weeks, but not IRS, because you may already heard it. IRS actually have a significant backlog during the pandemic, and then they are still working on all the tax returns, the paper returns, because many individual income tax returns are filed electronically. but for the FIRPTA or for the FIRPTA returns is always paper return, and paper returns, it takes a long time for IRS to process it. So they say they take on the website, they say 7 to 11 weeks, but in the reality, it's about 11 weeks for them to get an I-10. And the I-10, the W-7 form, it should be submitted with the original documentations or certified copy of the issuing agency. So when you apply for the I-10, you need to have passport. And then usually they want your original passport. When they receive it, they are pretty good about sending back to you. But many people are not comfortable to send in their passport. So the passport actually has to be certified by the issuing agency, which means for many people, it's you have to go to your Ministry of Foreign Affairs to get that, or whoever is issuing your passport to certify your passport, and you provide a certified copy, or you actually go to the embassies, the American embassy, U.S. embassies in the foreign country, and they can certify the passport. Another alternative is if your client are in town, they can have the certified acceptance agents who actually, like us, we do that. We are approved by IRS to serve as an acceptance agency that we can review the original documents. We can make copies of original documents and certify that we review the documents, and then so they can, then we will certify the copy, and then you can use that. And then so another thing is about when you applying for the I-10s, you have to remember the I-10. If the client say, you ask them, do you have I-10? And they say, yes, I do. And they say, do you continue using it? Because a lot of times if they are filing tax returns, filing income, if the property is being rented, then they will be filing income tax returns, then they will be continue using the number, then it should be okay. However, if they just bought it and then they got an item, but then they did not use it again. So if any number is not being used for last 3 years, for example, 2019, 2020, and 2021, then the number will expire. What happened when the item expires? If you actually using the expired item numbers on your phone, 8288A or 8288A, you will not receive your stamp copy, because I say they cannot process the return they have an expired number. So you actually have to go back to renew your item. So it's important for you to remember to make sure you have an I-10 and the I-10 is not expired. Okay. Then once you have those forms correct, then you can claim a credit for your FIRPTA withholdings shown on the Form 8288A, and you can complete a Form 1040NR using the item assigned and attach the date stamp copy Form 8288 to the return as evidence for FIRPTA withholding, and then to claim your refund. Okay. So I know there are many people who does like they did it after they saw that. So the person does not have I-10 and they really need to get their money. So as a result, they do not have a data stamp Form 8288A. Then what are you going to do? You can just leave the money to IRS. Actually, surprisingly, many people end up left the money with the IRS, which is surprisingly because the number usually is significant, but I have seen so many people walk away from the refund claim, and which I think it's kind of sad, because you think about 15% of even just 1 million is 150,000. How you walk away with that, right? That maybe it's all your profit, but people actually do walk away with that because of the hassle that go through. So if you actually, unfortunately, you don't have I-10 and then the money has been remitted to IRS and you do not have stamp copy, you have nothing, you can still do something about that. But it's going to be a more lengthy process. So you're going to send another Form W-7. you're going to send all the required documents, supporting documents to support the information you provide in that W-7. You have to send in a complete Form 8288, Form 80, and Form 8288, or your Form 8280B. You just send this with the closing documents to the IRS for them to trace where the payment goes. But this one, it's going to take a long time. That's why I'm saying I'm still dealing with the refund, the claim for 2017 tax year. It's because that actually in that case, it's actually I have expired I-10, which people usually don't notice the I-10 was expired, but that's what happened. Additional note to the FIRPTA withholdings is, I know that many times people think about husband and many properties owned by husband and wife, and then in the U.S. husband and wife file joint tax returns. So one single Form 8288 seems sufficient. It doesn't work for the foreign person because foreign individuals, they are not allowed to file joint tax returns. So it means husband and wife have to file separate tax returns to claim their refund. If you have one Form 8288, and then even though you show both names there, because if you go back to look at this form, there's only space for one I-10 number. So I've seen people do this is they actually put the husband and wife's name, but they only put down the husband's I-10 numbers. What happened is when you did that, the IRS, they are really smart. They figured out that their property was owned by two people, but it's only one I-10. What would they do? Give all the credit to the husband, or they automatically split it? But they don't, even if they don't want to split it, how should they do it? The problem, the case I see is the husband and wife has actually two names showing here. Here it's only show one person's I-10. So when I got this form, they figured out it's joint owned by two people. And then we actually attach a statement and say it's 50% owned on the tax returns. So actually they actually divided the credit 50% to the husband. What happened to the 50% to the wife? They say they will not issue the refund to the wife unless the wife has her own Form 8288A. So it is important for your joint or multiple owners have their own respective Form 8288A, and then they can all get their own stamp copy and get their own tax refunds. Okay. So this is a form I want to kind of talk about. Is this form that I think usually there's not too many things here. Anybody can file this form. So escrow company can do it, and actually anyone can do these forms. And then all the details, this is the most important form that you can have for the refund claim. So make sure this one is being reviewed properly before it's been submitted. Nothing should be amiss on this form. This is called Form 8288B. Usually you would not be preparing this form. This form, usually CPA prepared it because this one is for application for withholding certificate for this disposition. It's to have IRS to exempt the withholdings or reduce the withholdings. I want to go, this is the part important here. I don't know if you can read it. In the line 9, they asked you about whether they want to know whether they actually, so you have to check either this 7A, in order to ask for it, you have to show, say either the transfer is exempt from US tax or non-recognition transfer, or the transfer's maximum tax liability is less than the tax required to be withheld, or you actually have an installment sales. And for installment sales, then actually have a different rule how much you're going to withheld. And then so so this is sorry. So this is a Form 8288B for exemptions. There's another form. So another thing is there are people actually, if they actually sell property early and then they feel the money was being withheld and they were not getting money earlier, you can file this Form 8288B to have them to reduce the withholding, and then you will actually send them a letter, ask them to, once it's been approved, you can ask them to refund you earlier. But once you did it, if you don't have, so once you get this approved for 8288B, and even though you no longer have tax withheld by IRS, you still need to file tax returns to report your transactions. So for Hawaii, Hawaii is very, very similar to the federal, but actually Hawaii is more straightforward than federal. Hawaii withheld 70.25% on the sale prices. And then, but Hawaii for withholding certificates, remember earlier, the federal will let you you can apply either you don't owe tax or you owe less tax, you can do that. But Hawaii actually say if you owe any tax, you cannot ask for exemptions. You have to pay in. And then you can try to get the money, you can get an early refund using a different form, but I'm going to go back there. So if you're going to ask for exemption because you say the sale is a loss, actually Hawaii it's much easier. You can file the Form N288B, but you need to file it before 10 days prior to the date of transfer. For federal, you need to do it before closing. However, it takes them, I want to say 90 to 120 days for them to process in the application. So it's not common for people to go for the FIRPTA exemption anymore, but Hawaii is still very, very doable. 10 days prior to closing, send in to your exemption applications, and your clients, and then you will get a certificate before closing, and then you will give the form to the escrow, and the escrow actually will give you the money at closing, so you don't need to worry about that at all. Again, very, very similar to the federal one. If there are 2 or more non-resident transfers, they are jointly transfer Hawaii real properties, a separate Form N288B should be filed for each of them. As I said earlier, they file separate tax returns, so they should get their own form, no joint forms, even though it's a joint properties. Okay, this is Hawaii Form N288A, very, very similar to the federal forms. This is Hawaii's N288A, different than the federal. Earlier I talked about the federal, actually they will stamp copy the Form 8288A when they got the money and they will send it back to you. Hawaii does not send you back this one. So what I do is Hawaii actually sends you a letter, like a letter from the tax office, like they tell you what's your, it's just a notice. And basically they tell you they receive your money and this is how much they receive. You need that one too, because that one's also your payment received. In some cases, there are people in Hawaii, that's another thing is if you actually submit the Form N288A and you do not have an I-10, Hawaii actually will assign you a temporary ID number. And then once you get the IRS numbers, you actually will fill out the item number, you will fill out your item number on the later, they send it to you and send it back to them. So then they can update their records and make sure they credit the account to you, the payment to your accounts. And so this is Hawaii Form N288B, like how you can show them that you do not owe tax. And then, so this is the form you use. But for Hawaii, it's also when they do Hawaii actually, because of I think it's their practice, it's when you do the Form N288B or when you are filing the tax returns with a refund claim from the HARPTA, it's automatically, it's going to be audited. And so then they are going to they are going to you should not be surprised. You may receive a letter to tell you that your return has been selected for audit, and they are going to ask to see all your closing documents, your purchase documents, and I think in many cases, it's actually many people actually have very substantial improvements during their ownership period of time. So they increase their value of property a lot. But I think what they do is they went online to check the initial purchase prices and then the sale prices, and then if the amount is huge differences, they will actually audit. So for me, it's once they see there's a huge number of differences, it is going to be audited. So it's going to take some time to delay your refund as well. But once they get work through it, they are pretty fast in getting your money back. This Form N288C is for the people who actually they got the money in, but they want to get an early refund. They use Form N288C. So in summary, the seller should have individual taxpayer identification numbers, and their item should not be expired. So this one is very, very important. And second, multiple owners should have their respective Form 8288A. The third one is the mailing address on the Form 8288 is correct, because if it's incorrect, you will not receive your stamped copy, which is going to make it hard. The fourth one is you have to return ISO. So I think that's also happened. Many people receive this stamped copy of Form 8288 from IRS and say, I don't know what to do with that. And then they just displace it. You need to return this copy. As well as the Hawaii Department of Taxation payment notification letter, you need to return that and provide it to your CPA. And then another thing is you need to file income tax return to get a refund. I think many people they think about their filing tax returns in their own country. I heard that there are people who actually file tax returns in their foreign country for the sale because they are taxed on the worldwide income. And then they were saying they already paid their tax in their countries. And how come the US is holding the money? Because they are foreign person, they are not subject to tax in the US, which is exactly what is a FIRPTA and HARPTA, because the US cannot let these foreign people to just sell the property without paying the tax in the US and walk away. So that's why they withheld it. But I actually have people come to me and wanted to have refund and think it's automatic because they filed their tax return in their foreign country. Another thing is if they pay tax in the US, the credit can be used against their foreign income, the foreign tax. But if they pay tax on this Hawaii US properties, the tax they pay in a foreign country cannot be used to offset the US tax. So you have to calculate the US tax first. So, and that's another thing that they need to know, that they need to file income tax returns. And also, I say anticipate audits of income tax returns. It's very, very common for especially Hawaii to audit the refund claim related to HARPTA. And then lastly, be patient. The refund claim for FIRPTA, it will take longer to process. It's even longer than before. And then you think about in pandemic time, you think about how many paper returns I was trying to get through them. It's going to be a long process. And then, but the important thing is for your sellers, they understand this is not a short process. But if you can make sure your groundwork, your Form 8288, it's all correct and everything's there, you are more than halfway to your refund. So you will be the best person to help the seller and help the CPAs to get this refund claim faster. So thank you.
Oh, that was great. Thanks, Jessica. We have some questions if you're okay for a few.
Oh, sure.
Okay, first question is, what happens if the buyer does not have a social security number or an ITIN?
So you can still do it, but actually I will always recommend the buyer, if the buyer does not have it, if they were intended to sell the property, to rent the property, they need I-10 anyway. And then they can submit their I-10 with the Form 8288 at the same time like you. So they can submit it, and then IRS actually will put in a number for you. But if the buyer does not have it, if it does not have I-10, it's not the end of the world, but it would be better if they have it. The reason is, it's for a very, very interesting reason. IRS actually link the FIRPTA payments to the buyer. Does it make sense? It's because, remember, the money was paid by the buyer. Buyer is the withholding agent. So actually they are the one who is submitting the money. So the verification process actually, when you are filing the tax, when we are filing the tax return, we are trying to e-file the tax returns. If we do not have the buyer's item number, the seller returns cannot be e-filed. You have to paper file. And then, as I said earlier, when you e-file, you get your refund usually faster than paper because IRS does not process paper returns, right? So paper return fast. So if you have the I-10 for the buyer, you can e-file your returns, and then you can be fast. You are on the fast lane. If you don't have it, then you have to file a paper return.
Okay.
And you will be in the, I don't know.
Yeah, understood. Slow pile with the
that
IRS.
they will get to it, and eventually they will get to it, and they will say, we don't have it. And then you say, here, this is what I have.
Right. And just let me ask you another question. If a seller is a married couple,
Yeah.
one is US citizen, one is not, how is that treated?
So that's if usually when the US citizen, that one spouse is US citizen or the other one is not, if they actually, because the non-US citizen actually can make election to be treated as US person. And so then they will file joint return. So in that case, you can have another thing is, if the US citizen actually, the US citizen portion is not subject to FIRPTA and HARPTA, or FIRPTA at least. Only HARPTA if they are not Hawaii resident, right? So it's only the portion, it's the wife portion or the husband, the non-citizen portion subject to the withholdings. And then so in that case, if the wife is going to, or the spouse is going to say, I'm going to file the joint return with my husband as a US person, they make the election, then actually you can be exempt, but they have to file joint returns. In many cases, that's the reason why one person is a US person, the other is not, because for tax purposes, you don't report your foreign activities of the spouse. So then they will have separate ones. So in that case, just only the foreign spouse has their Form 8288 and N288.
Would that mean in that case that perhaps 50% is going to be
50%.
withheld? I see.
Yeah,
Okay.
so it should be 50%. But another thing is kind of going back, this is about tax. We say we cannot default 50%. It's making an assumption that each party put in 50% of the proceeds. But however, if in the realities, if end up say husband or the wife is one who's put in 100%, then actually it's the person who paying all the money.
I see. Okay. All right.
Oh,
And now we've had this come up, and maybe you could talk on this. Sometimes our foreign clients have different names. So they have a passport name. They might even have two passports. I just want to point out it's important that they buy the property in the same name as the I-10. You're smiling. I guess you've come across this before.
Okay. Yeah, that is a horror story. But anyway, there are many people, yes, they actually change their name. And when you change your name, or sometimes they have social security number. When they have social security numbers, like I'm going to say, a lot of people who come to the US as students, they actually acquire social security numbers when they were students a long time ago. And then later on they will come in, and then they have their passport and it's in a foreign name. And then you ask them, do you have a social security number or I-10? They say, oh yeah, I do. Then they put it out the name. The name doesn't match IRS records. So therefore, they actually, the name on the title on the sale documents and the social security doesn't match. And so that's a problem. But another thing is actually, if you already have social security numbers, you are supposed to using your social security numbers for tax filings. I-10 is only for those people who does not have a social security numbers.
Okay.
So
And
yeah, so that's another thing you have. But I think also at the same time, they are, even when you have social security numbers, but I think there are people when they have social number when they were single and then they got married and then they changed their name, and but then they never, so they got a new passport, but they never go back to the social security office to change their name on the records. Those will also, you will not be able to get your refund because IRS cannot match it.
all right. And Jessica, what are the most important things we can do as realtors to prepare the buyer and the seller when they're purchasing and selling in the US?
Okay, so the most important thing to tell them is, doesn't matter what, get your I-10. The I-10 is very useful. Make sure it's not expired. Make sure that if you actually, if you're rental properties, make sure you are filing your GT returns, you file your income tax returns, and just make sure that the form is complete properly, and file attention and just hope for the best.
Okay, and I've got a couple more questions if you're okay. Regarding exemptions for HARPTA, FIRPTA.
Yes.
What are some of the exemptions? You mentioned 1031 exchange,
You can do
selling for a
exchange.
loss.
Yeah, so 1031 exchange, selling for loss, or when you actually, in many cases, people actually, they own a property under individual name, and then they decided they are going to set up a company because they own a lot of sale that they wanna transfer the property to the company. So it's called Section 351. This is, you are giving the property in exchange for shares. Those are non-recognition transfer, so those will be okay. Yeah, so that, I think, yeah, most are like that. Yeah.
Okay. And what do you have a recommendation for foreign clients of how to hold property in the US? Under individual name, under entities?
It's all based on, I always ask them, what's your investment goal? How long do you plan to hold it? It's the using individual name, it's easiest way to hold it, because you know, it's, you don't need to set up another entities. And if you are only use it for your vacation home, you don't want to deal with all these filings. So those are the easiest way. However, the one easiest way come with the biggest exposure is for the estate tax.
That's the next question I wanted to ask you.
Yeah,
For
the
a
estate
state,
tax. So that's why I say, if you are young and vibrant and everything looks pretty good, you know, and then you did not plan to hold for a long time, but the estate tax is a huge issue for individuals because the tax rate is high, exemption is low. It's only 60,000. 60,000 means almost zero in a way, and you and it's going to pay a lot of tax on that. You can use a corporation, but corporation has cost to maintain, right? You need to file tax returns. There are some people using the trust to hold it. Some people using foreign corporation. I think it all depends on what you try to accomplish and how big is your investments and how long you are going to have it. And so there's no one right answer for everyone. I think it's, you actually have to, and then another thing is sometimes life changed. And so people's objective changed. And so then you would start to want to move around. But the thing is, you know, when you move around the properties, it involves costs. Minimum, even you don't pay the sale, the realtors, you had to pay the conveyance tax. Whenever you change hand, that's automatically you have to pay, right? Yes. But and so it's, they were, I don't have a right answer. I feel like anyone's fine, but you just need to be okay with that.
Okay, all right. And do foreign buyers, owners of property, if they're not renting out the property, are they required to file any sort of taxes in the US?
They are, if so, no. So if the property, so the reason they have to file tax return in the US is actually they are doing business in the US. So renting it out, actually, it's not in the US, it's not considered as trade or business, but it's a US source income. So usually you have to withhold 30% from the rent and pay to IRS when you receive the rent. However, because there are so many expenses, that sort of things, so many people will make election to treat the rental as a business. And then that way you can take deductions and everything. And then you have to file tax returns. So if you want to get those deductions from your rental income, then you have to file tax returns. And if you don't do anything at all, you only need to file tax returns when you are going to sell, because the selling of US properties is considered a business. So you have to file tax return for that time.
Okay, and then one final question. From your perspective, what you hear when you're dealing with your clients, what are some of the biggest misconceptions that foreigners have about purchasing and selling property in the US?
The biggest one.
Or some of them, what are some things that you hear?
I heard a lot. It's actually, as I said, that I heard this horror story. It's about actually the people think if they are paying tax in, many people think when they rent it out, they feel like I'm not making money because, you know, deducting all expenses, I don't have any net cash left, so I don't owe money. Why should I pay tax? Or why should I file tax returns? I have nothing to report, right? So that's one thing, but I want to say that's a very big misconception, because if you start renting that, you know that you can, if you report a file tax returns, you can take depreciations for your property and you get deductions, right? But if you don't file tax returns, the depreciation still will be depreciated. You just wasted. You don't have any. And then so when you file returns, you are going to have lower basis. Many people actually think that they are not US persons, so they don't need to pay tax in the US. Many people think the refund just you pay in and IRS will. I think that in many countries, I think there are some countries actually they figure out your taxability for you, and the people don't need to file tax returns. I think even in Japan, like if you are just regular salary people, you're not claiming anything, you don't need to file a special tax return because everything was done by your employer, and then you don't need to file tax returns. And then so there are people actually think they would just get a refund because they say, oh, I think that what happens, or the tax has been withheld, but you will get it back because you know you don't owe that much tax. And then they say, oh, how come my money is not back yet? It's been paid so long already. How come they are not giving my money back yet? And you never file anything. So
Yeah, that's right. And I'll add one.
not going to give it.
No, yeah, they'll keep it as long as they can. And I'll add one more to your list, which I hear all the time from foreign people transacting, is that they think HARPTA and FIRPTA is a tax, not understanding that it's actually a withholding.
It's a withholding. They are not
right.
taxed. Yes,
Yes,
they are not taxed at all. It's withholding. It's like, I want to make sure you pay your fair share before you walk away. Because you know, if you're a US person, they can come in, they can put you in the jail, they can take your property away. But for a foreign person, once you're out, they have nothing to hold you.
Yes.
So that's why they have to hold something collateral here and say, come to claim it.
Yes, and this is very common. Our HARPTA is common in other states across the US as well.
Yes, yeah, very good point. So that's HARPTA. So actually every state does the same thing because every state want to have their fair share of it. And then so you can all claim the refund. And I think every state has similar forms too. So it doesn't matter where you are. Yeah. All the states actually has it. Yeah. Unless they don't have the income tax in their states.
Well, Jessica, it's been a great time with you. Thank you very much for sharing all your knowledge.
Yeah.
And I said it earlier, we've referred people to you. Everyone has been so happy with your services. So if anyone needs help out there, definitely give you a call. Thank you to Leonard and Guaranteed Rate for sponsoring today and for everyone joining us. So be safe, be healthy, and we'll see you next time.
Thank
Aloha.
you. Bye.
Bye, Jessica.
Thank you. Bye.